Hey traders, Raghee here, and this is a follow-up video to this consistent narrative that we've had since just before the election about being on the short side of the dollar. Now, this particular chart is the dollar index futures contract, and depending on what we see on Monday, I might start looking at a long euro position, okay, a long euro. But let's talk about what we have on this DX here. And what I did is I just layered in a number of retracements looking at where this market could exhaust. And you can see here that we kind of ran right into this area in here, and it seems to have been holding. And what I want to keep in mind is that I'm less interested in projecting what the ultimate resistance is going to be, because it's not that I want to short the dollar from whatever this level might ultimately end up being. What I'm looking for is a pattern. Now, if I can have a number of price levels that I'm looking at specifically, it just narrows down what I am looking at in terms of potential resistance. But I'm just really much more interested in where we get a swing high or a minor high, and then I'm looking at the way in which price action moves when it's starting to move lower. In this case, that was a pretty healthy move to the downside. What I'm going to then anticipate is a potential move that's either an inside day. That would be great. Maybe we start shooting up a little bit higher and retest this area, but whatever it is, we have the beginning of this swing high, and it could then set up a long in the euro. Now, why do I like the long in the euro? Well, look, if you want to play the 6E futures, if you want to play the FXE ETF, that's great, because most traders have access to the Chicago Mercantile Exchange. And this is really just a matter of access and cost. Chicago Merc, most brokers will give you this feed included with your brokerage account. But if you want to play the dollar index futures, you're going to need the Intercontinental Exchange, which is usually a pretty significant monthly exchange fee. So I'll just direct people over to the euro when the dollar exhausts, because remember, 58% of the dollar index is in fact euro. Now, this is a great conversation in terms of one way to play the dollar, but the way that we've been talking about here will persist in being my preference for buying pullbacks to the 34 EMA on the close in the British pound. Okay, this continues to be the best looking trend in terms of dollar shorts and a buy on the other side. So British pound buy, dollar short. My second favorite is going to be taking a look at the Australian dollar or the New Zealand dollar. Okay, Australian dollar or New Zealand dollar. And you can see there's a really nice intact trend on the New Zealand dollar. The trend is not too bad on the Australian dollar either. You can see a pretty good trend there, but I am looking for a potential buy on that. Now, I haven't let go of the Canadian dollar for a potential Canadian dollar buy. So that would be, let me take a look here at the CD futures contract, the Canadian dollar, the 6C futures contract. What we'd like to do here is really take advantage of the overall trend higher in crude. I mean, quite frankly, crude is your better play on that. But what I'm trying to do here is sort of give you the process where I'm looking at a lot of markets that are related to one another. I'm looking at a lot of opportunities to find the best trends. And all of this is rooted in the dollar weakness. Whether you're looking at the uptrend in many commodities, that's your reflation trade. If you're looking at shorting dollars and buying pound, that's still your reflation trade. Shorting dollars and buying Australian dollar, New Zealand dollar, that's still your reflation trade. So everything's going to come back to that. And so even though dollar had a moment, let's focus on the short side and take advantage of this particular level. All right, that's what I've got for you guys today. I'll see you in the next update.